Thanks for joining us on Parliament. This is BloombergQuint. I'm Harsha, Subramniam.
Good afternoon. I'm Dugal. Let's get straight to the headlines. The Nifty continues to stay below the 9,850 mark. FMCG stocks like HUL are top losers in trade this afternoon.
The rupee drops to a 6-month low on debt outflows and fresh dollar buying by Indian banks.
Oil prices are at a 2-year high after Turkey threatened to disrupt oil supplies from the northern region of Iraq.
Hindustan Unilever says rural demand is still sluggish and it's going to be a very slow road to recovery.
And Temasek is going to make 3 times its investment in 5 years when it sells 20% stake in Godrej Agrovet during its upcoming IPO.
The markets first, and let's take a closer look at how they're faring in trade today. It's been a weekday through a whole host of factors. Neeraj, what's catching your eye?
The only solace is it's off the day's lows, if it means anything really, but frankly it doesn't. But yeah, it's off the day's lows, so that is one good thing. And the Bank Nifty is holding on to 28,000. I think from a trading perspective, I mean, the reason I bring it up again and again is from a trading perspective, if the Bank Nifty were to break the 24,000 level, then that would be a big dampener. There could be some positions that could get unwound, and it could impact the levels that the market could have till the expiry. So that is one key thing. I think what's happening on a larger front, one, the rupee, 6-month lows, oil sensitives reacting big time to the uptick in oil prices, and HUL commentary leading to HUL doing what it is doing, and some of the other FMCG names also coming off. But I think the bigger play, quite frankly, is what's really happening in the oil sensitives. So one, BP, HP, IOC naturally so are down. ONGC naturally is the top gainer in the session today. So that's one basket of stocks which are doing well, really poorly or really well, depending on how you look at it. And then the set of smaller oil exploration companies, you know, there's just crazy behavior, because it's not that people are going to start explore oil just because it is currently on an uptrend. But look at what's happened to a Deep, a Ceylon, an Aban offshore, some really strong moves. So this is essentially just trading behavior.
I mean, it defies logic, right?
It does, it does.
The oil is up for a day. Let's go explore oil.
The only thing that the bulls will say that, hey, if you look at it, oil is up from 45 to 57. So, hey, it's not just up for a day. I mean, it's been up for a while now. But, yeah, it's moved up today because of the levels that we've seen yesterday and otherwise. But, yeah, so this is one amazing pocket of strength today in an otherwise weak market for the broader end of the spectrum, for sure.
Power stocks, no excitement over the scheme announced.
We didn't expect that, did we? But no, not really.
All right, Neeraj, thanks so much for that. Actually, the reason I asked Neeraj that last question is because, well, there was some chatter around the Prime Minister Narendra Modi scheme, which was unveiled. Essentially, the scheme intends to provide electricity to all households in the country by March 2019. The government will spend 16,320 crore on the scheme. How is this different from other schemes and other intentions that the government has already placed in public domain? Joining us to speak about that is Power Secretary AK Bhalla, who joins us on the phone line. Mr. Bhalla, good afternoon. Thanks for joining us. I guess, you know, the first question is, what was the thinking around announcing this scheme right now? For a while now, the government has said that it intends to provide power to all by 2019, and there is a scheme called the Deen Dayal Upadhyay scheme, which was intended to electrify all villages. That's already there. So what was the point of announcing this, sir?
See, we are completing the village electrification by December. So as a next step, I mean, you have to go to the household to achieve objective of 24/7. So this is the right time to bring in another scheme so that households also get connected.
So over what period of time will this scheme be implemented? The spend will come in over what period of time?
2 years, basically, current year and the next financial year.
Okay, and have you mapped out an implementation plan, sir, as well? That probably will be the tough part.
We have been discussing it already with the state governments with DISCOMs. It will be implemented to the DISCOMs on the same model as village electrification is being implemented, and on the same similar funding pattern also. But it will be a different scheme, and it will cover the rural, urban unelectrified houses also.
Okay, so it will be a scheme which is different from the Deen Dayal Upadhyay scheme. And how much will be spent in the current fiscal?
About, approximately 4,000 crores.
Okay, so there's some concern within the analyst fraternity that distribution companies will not be particularly excited about serving this segment because it's not particularly profitable. Any thoughts there, sir?
See, in any case, distribution companies are looking for additional demand. And definitely, if it is a metered connection, they should be happily looking at it. I don't see any reason that why they should not be enthusiastic about it. And finally, it will be a meter-driven payment, which will be the thing as meter is an essential part of the scheme.
Would they find it easy to serve this segment and also recover dues, sir?
No, it's not like that. You know, some people were, when the electricity had come to a village, some people were willing, but the procedural issues were there. Sometimes you don't get a meter, then you apply for it, have it tested. All those procedures were there. In this scheme, at least, it's at your doorstep. The agency engaged by Discom will provide everything and provide you connection right in your house, standing there using the mobile system. Your connection will be issued and meter will be installed right there itself. So it's much better in that it is convenient to the consumer. So a villager otherwise would have gone somewhere to look for an office of Discom, which won't be nearby, buy a meter, have it tested. All those problems are there. So this definitely is looking at quite a conceptually quite a change.
Okay. So there's a subsidy element to the scheme?
I mean, I don't know what you call a subsidy element. You know, this is a support of financial support which Government of India is giving for implementation of the scheme. That is a similar pattern what we are giving for the India Lupagya Yojana or ITDS.
But no subsidy at the consumer end is what I meant. No subsidized power.
No. On consumption, there is no subsidy. Let us make it very clear. On consumption of power, there is no subsidy. Whatever the tariff fixed by Discom is recoverable from all consumers. Only we are giving connection free for poorer households and recovering some money for the other households. I mean, above poverty line households.
All right, Mr. Bhalla, thank you so much for joining us with that. So there you go. That's the scheme. Makes sense. Harsha fits into their larger game plan. But I mean, if it was intended to do anything for the economy, that probably is not going to happen.
And economy is the next talking point. There might be some more pain in store for the Indian economy as the Asian Development Bank cuts its growth forecast for the country. The multilateral agency has, however, increased its estimates for the rest of emerging Asia. Ira has been going through that report. You know, it's not great news for India because there's actually been a cut in the forecast for India alone.
Yeah, I think if we can just put those charts up, it's there's not much to say except that the overall picture for emerging Asia has improved. It's improved because of China. China's growth rate projections have been pushed up, but India's have actually been pushed down a little bit. On China, they talk about the fact that growth prospects have improved because of some sort of fiscal push and also what they called unanticipated external demand. In India, the problem, of course, is entirely different. Short-term triggers, demonetization, GST have added some pressure to the Indian economy, which means that the Indian growth rates could be slightly lower in 2017 and in 2018. They're still at 7% for 2017 for India. Just a brief mention of the inflation numbers as well, just to make the small point that inflation is underperforming not just in India but in emerging Asia. So they've cut down their forecast for the inflation levels for the current year, but also for the next year.
The government, the Modi government, meanwhile, is exploring stimulus measures to get the economy back in the growth path, but the option seems quite limited. Anirban Nag of Bloomberg News now joins us to tell us what the balancing act is likely to be. Anirban, this is as you said, between a rock and a hard place. Right. What are the challenges, both on the revenue collection side and the fiscal headroom side?
If you look at the July statistics, the budget gap is already at 92% of the estimates. So that leaves very, very little window for the government to actually loosen purse strings, so as to say. At the same time, revenues have been underperforming. That's partly because industry has not been doing too well. So all in all, the other part of it, the cash cows, which are the dividends from the public sector units, especially the RBI, has been much less than what they had. The telecom spectrum auctions are not likely to net too much. So from a revenue sort of thing, from what's going to come into the government, it doesn't look all that bright. At the same time, spending is going on partly because of the GST related uncertainty, which is the central government putting into money into the state government offers. So there's a little bit of spending going on. Revenues haven't kept. So
And there will be tax claims as well.
absolutely, the refunds have bloated up quite a fair bit. So it's going to be a very, very difficult and a Herculean task for the Modi government to actually balance its way out of this.
What could be the potential options then? At this point in time, we have no visibility.
I mean, it's all up in the air, isn't it? There are a lot of economists who are saying that there's only a 0.3 to 0.4 percentage point gap that they can use to pump prime the economy. What they can do is, we had some of the newspaper reports yesterday telling government department to speed up spending. Now, a lot of that depends on how they go about from here on. I mean, it's not looking very rosy.
Okay, let's get another voice in. We're talking about the currency as well. The rupee is under pressure as questions rise over the government finances. Rising oil prices is expected to raise India's import bill, and that may in turn lead to further depreciation of the rupee. The currency currently trades at a 6-month low against the dollar. Joining us now is Bhaskar Panda from HDFC Bank's Treasury Advisory Group. Mr. Panda, thank you so much indeed for joining us. What's going on in the currency market? You know, the first half of this year, we were touting this as the best performing currency in this part of the world, and suddenly the direction changes and you have a whole host of factors influencing this. How do you read what's going on in the rupee market?
I think if you look at the past, rupee has appreciated more than it deserved. Obviously, it's a cliched term right now. However, we have been saying that there was possibility of rupee depreciating a little bit from where it was earlier. However, right now, this depreciation, which is not very big depreciation, but it has come in spots in say 2-3 trading sessions. So therefore, it is a little more noticeable than if it has been done in say 10 or 12 trading sessions. Having said that, I don't see technically it going beyond 65.51 because that is the 200 daily moving averages. So that will actually limit the rupee fall at least for the time being. In the longer term, probably we can see rupee going towards probably 66 max and not beyond that. Obviously, commodity prices and especially the oil prices will remain a worry, and we have seen our balance of trade. Your trade gap has been wider also. So those things will definitely come and bite at rupee, but not beyond a point.
Mr. Panda, good afternoon. Ira joining in as well. Sir, you said 65.51 technically. I just wanted to understand the structure of the market in the sense, how are exporters, importers positioning themselves right now? And I think RBI intervention has been relatively limited, right? They came in one day when there was extreme volatility or, some volatility, but they've been largely hands-off, sir?
As of now, I have not seen much. Today we heard something around 65.35 to be in particular, but I think the RBI will always be there to smoothen the volatility. They will not. I don't think they have already said this quite a number of times. They are not targeting any rate. So therefore, any volatility they will be there to smoothen it out. And the 65.51 that I mentioned is the 200-day moving average, which is normally a pretty strong resistance point to break. So what I'm saying in the short term, probably will not see it breaking. In the longer term, as I was saying, probably we could see 66 plus going forward. I don't see a point in getting too much on panicking at this point of time. We should take it as a positive development rather than panic because rupee has lost some percentage in the recent trading sessions.
Mr. Panda, there is a view in the market now that the government may offer some sort of a short-term fix that may cause the rupee to depreciate even further. Would you agree to that view?
No, I don't think so. I don't know anything about it. In fact, if you look at the other way. They have already given this for around $4.5 billion of leeway on the corporate bond side. So I don't think, at least in this market, I have not seen that happening. If something is happening in the government, I really don't know.
You're also seeing overseas, rupee-denominated debt, both on the government side and the corporate bond side, outflow to the tune of nearly $98 million just in the last couple of days. Is that outflow bothering the market at this point?
Not bothering too much, but yes, outflow when it comes, together, then you have a problem. I mean, exporters are shy of selling when the rupee starts depreciating. This is a herd mentality that we have seen in any time rupee started depreciating. If it continues to go the way it has happened in say last 2 or 3 trading sessions, probably we'll have some panic buying coming in. But as of now, honestly, I have not seen any importer coming and buying because rupee has depreciated a few percentage in the last 3 or 4 trading sessions. I still see exporters seeing this as an opportunity to sell rather than importers panicking and buying.
Absolutely, Mr. Bhaskar, Mr. Panda, completely agree with you. This is a long overdue correction and perhaps is coming in the softest way possible. One last question, sir. Today, of course, everyone is talking about crude prices adding some element of downside to the rupee, and we'll have a chart up shortly. The rupee doesn't always react in one direction to crude prices. It depends on a whole lot of factors, sir. Over time, those factors tend to change. At this stage, though, rising oil will probably push the rupee down.
I think, as you said very rightly, it's not one, thing that we should consider. There will be host of things which is, happening at the same point of time. We have seen dollar index also move up a bit. We have seen, I think dollar index also has hit multi-year lows, and it is going to probably, go up from here. So given all those things, and we've seen emerging market currencies and reacting the way they have reacted. So I think it's a healthy correction, and we should take it that way only.
Mr. Panda, we'll leave it there. Thank you so much indeed for joining us. The Bhaskar Panda from HDFC talking about where the currency is going to move. But here's the interesting bit, the point that Ira was trying to make, correlating how oil prices have been moving along with the immediate rupee movement. Oil prices are at a 2-year high after Turkey threatened to disrupt oil supply from the Kurdish region of northern Iran. Brent has touched 59.46 to the per barrel in morning trade today before cooling off, but staying well above that $59 mark. Jayesh is standing by with a very interesting analysis from Bloomberg, telling us why there could be a buy signal further for Brent crude. Jayesh.
So Harsha, what I'm picking up is that on the chart of Brent crude, there is an interesting chart pattern formation called as the golden cross. Now, let me first tell you what the golden cross is. When a shorter term moving average crosses above the longer term moving average and goes higher, that's when your golden cross has been formed. Popular numbers that the market looks at is 50-day moving average and 200-day moving average. And as of current situation, you can see that the yellow line, which is your 200-day moving average, the blue line, which is your 50-day moving average, there has been a positive crossover. Now, this is a long-term chart pattern formation that has taken place. Now, moving averages essentially give you a confirmation of signal because the way that they are calculated. So, they are lagging indicators and not leading indicators. So, we have seen prices move sharply from about $50 to $60. And right now, we have got a confirmation that prices may head further upwards.
Jayesh, thanks so much for that. That's the oil scenario. Shifting to corporate news, rural demand remains sluggish. That's the word coming in from Hindustan Unilever. The country's largest FMCG player says demonetization and GST only added to the challenges, and the trade situation is improving only gradually. Agam Vakil is standing by with details that came through in a presentation made by the company to investors. Agam, this is not good news.
Well, it certainly isn't, and it's showing up in its stock considering it has seen weakness of as much as well over 2.5% right now. So the presentation was made in the RSH Consumer Symposium, in which they have said that the last few quarters have seen a hit when it comes to consumer markets, especially on the back of demonetization and the transition related challenges to the GST. The commodity costs have also seen substantial volatility, and that is something that could continue, which is why you could see some weakness in margins. And however, they are also saying that trade situation is improving gradually, and the wholesale channel has now started to stabilize, so this could counter some of the weakness expected. But as you already mentioned, they are looking at rural growth, which is taking a little longer than expected to recover, and based on that they could see a little bit of improvement in back-end orders and delivery logistics. But on the whole, there still are concerns when it comes to rural demand and its possible impact on a large company like HUL.
Agam, thank you. Godrej Agrovet is headed to the markets. The Godrej family's promoted firm is looking to raise over 1,157 crore from the primary markets, and it also gives existing investors like Temasek an opportunity to make more than 3 times the investment that it had made 5 years ago. Samit Sarkar is standing by. He's done some math on how much money they're likely to make if it comes to the market, that is. Samit.
So, V Sciences, that is Temasek Holdings investment arm, had invested in Godrej Agrovet in 2012. Now, they bought 20% stake at 154.6 rupees per share. Now, they're selling at the price band of 450, 460. So, that is 3 times their investment in 5 years. Now, Godrej Agrovet is looking to raise close to 1,157 crore rupees at a price band of 450 to 460. And of the total issue size of 1,157, 292 crore will be used to repay the short-term debt and for general corporate purpose. Now, Godrej Agrovet is a diversified and research and development focused agribusiness company which generates most of its revenue from animal feed, that is 47%, followed by milk and milk products, which contribute around 23% to its total revenue. Now, coming to the financials, the company's revenue grew at a compounded annual growth rate over FY13 to FY17 at 15.5%, while net profit grew at 26.7%. In the same period, EBITDA grew at 22.6%, while margins remain in the range of 7 to 9%. Now, as of 30th June 2017, the company's net worth was close to 1,328 crore, while the total consolidated debt as of August 31st stood at 990 crore. Now, when you come to the valuations part, the price to book value for Godrej Agrovet is currently around 6.6 times, while price to earnings is at around 29.4 times. Now, this price to earnings is calculated on the basis of annualized FY18 earnings.
All right, Samit, thanks so much for that. Interesting numbers, and yes, quite a packet that Temasek is going to take home when that company does actually list. In fact, it's going to, once it's listed, be one of the few companies which will be a holistic play on the rural economy. Let's move to pharma. Pharma companies are already plagued with pricing pressures in the US. They're now seeing another pressure point, that's the domestic business as well. Most drug makers witnessed a slowdown in Indian formulations in the first quarter, and the reason, destocking ahead of GST. Darshan Mehta sat down with the management at Lupin to try and ask how confident they are on growth from here on.
As far as domestic market of Lupin is concerned, obviously the first quarter was impacted because of the GST. Yes. We started the quarter with a very, very robust growth as far as April is concerned. Even to great extent, May was also good. But I think June saw the biggest impact of GST, because of which quarter was, impacted. But if you look at the results of most of the domestic results of, different organization, I think we have been one of the best performers as far as Lupin is concerned in the first quarter. Okay. Because we have been impacted by 5% as far as our growth is concerned over the last year. Obviously, it is only because of June, and we are very sure that July, August have been very good months. We are very sure that whatever we have been impacted in the first quarter, going further, as far as next quarters are concerned, we will be able to cover up to a great extent.
But you've guided for 14 to 15% revenue growth, for the balance for FY18. Now, the first quarter wasn't the best. So, how do you think this number will come in? What are you doing and how are you so confident that this number will come in?
So Darshan, if you look at the Lupin performance, domestic business over the last few years, if you look at last 4 years, the market has grown at a CAGR of 12% and Lupin has grown at 15%. So that's how we have talked about 15%. Yes, the first quarter has been exceptional, a different quarter because of the GST impact. But I'm sure coming quarters, once the destocking, whatever happened in the month of June, obviously, the stock levels will go up. And we are seeing that particular uptrend in July, August. And obviously, in this particular quarter onwards, this quarter onwards, we will be on track as far as 15% growth is concerned. And one of the reason why I am so confident as far as next 3 quarters are concerned, because the portfolio, what Lupin as far as domestic business is having.
Okay.
If you look at the market has acute portfolio contribution of 65%, chronic portfolio contribution of 35%. But as far as Lupin is concerned, we have more, contribution coming from chronic segment, which is to the tune of 54% versus market of 35%. And the chronic business, particularly lifestyle diseases, these are the drivers of the business, and that's where we expect that we will be in much better shape as far as next 3 quarters are concerned. Plus, we have also got a lot of alliances, with the other organization in diabetes segment, and that is one segment, which is doing very well as far as market is concerned, and we have launched certain new products that will also add to our growth as far as diabetes segment is concerned.
You said that there was impact of destocking that happened in the first quarter. How has been the impact been, and when do you see a normalization of the domestic business? Which quarter probably?
So July, August, September, as I said, that we are seeing the uptrend. I'm sure July, August, September, when the results will be out, most of the companies will recover, whatever they have lost. Some part they will be able to recover in this quarter. But I'm sure it will take longer time. Might be next 3 quarters, we will keep on, having whatever we have lost as far as first quarter is concerned. So it may be a little longer. You can't cover entire, whatever destocking happened in first quarter or second quarter, but we clearly see the trends, coming up.
All right, let's focus on one of the stocks that's buzzing in trade today. Avenue Supermarts, that's the company that runs D-Mart, is up nearly 15.5% in trade today. This comes after Goldman Sachs initiated a coverage on the stock. Agam is standing by to give us a sense of what's been the triggers and what's Goldman seeing.
Well, Goldman Sachs is working on the prospects of this particular company when it comes to operational gains over the 10 years. What Goldman Sachs is saying that they are expected to benefit from tax reforms as the grocery market, shifts to the organized sector. And on the back of that, they're expecting a 13 times jump in its EBIT over the next 10 years, aided by high growth and low margins, and again a very high return strategy. Its valuation currently stands at around 65 times FY19, and this does not factor in the complete growth and business model of D-Mart. And I was also looking at its FY20 estimates, which stands at around 46 times as of yesterday. So if you consider today's jump, it comes to as much as 50 times. Well, it does look expensive, but considering the kind of cost that we are looking at, including Goldman Sachs, which is pegging a price target of nearly 1,586, we have already seen D-Mart move to 1,200 today itself. Well, we're going to keep an eye on this one and how it pans out going into today's day of trade.
All right, thanks so much for that, Agam. 16% higher on the stock. We'll close off the show with news coming in from the banking sector. Demand for corporate loans is weak, the retail loan market is overcrowded, and banks are struggling to grow. So what do? They start pushing schemes to grow the unsecured loans segment, which is considered to be risky. Banks claim this time will be safer because of improved analytics, but it's not a trend that should be ignored. Vishwanath Nair joining us with recent schemes that have been announced, or recent programs that have been announced, and putting it in the big picture of the kind of growth that this segment has seen. Vishwanath.
Yes, you're right. Credit cards as well as some of the other personal loan, unsecured personal loan segments are showing firm growth of about 30-35%. This compared to last year, which was much lower as compared to what is happening now. In terms of festive loan growth, typically this is the time when it picks up. The unsecured lending growth picks up, and banks start offering more offers. Banks start offering more discounts on you using cards on e-commerce websites and some other sale options. This year, however, there has been a further push. If you see the total loan growth, it's at about 7%, 7 to 8% odd, while in this segment particularly we are seeing much higher growth target. We've seen HDFC Bank come out with something known as the social media analytics scheme, so that they can give out more credit cards to their first-time customers, depending on whatever their analytics show as credit worthiness. We've also seen ICICI Bank get into the payday loans, which is a 30-day loan scheme. Similarly, SBI has started giving out more credit cards to their own customer base, which is a significant customer base, depending on giving out pre-approved cards to these customers. So obviously we will see further penetration in the credit card market as well as the unsecured loan portfolio. In the total scheme of things, however, unsecured loans is a very small portion of the total loan growth. Even among retail loans, it constitutes only 30% odd of the total loan pie. When you look at it on a total loan book of all books, all scheduled banks put together, it's only about 7%. So even though it's a small segment, the high growth is something that can be considered concerning, because if you remember 2008 and 9, we had seen significant pressures on retail loan books of various large banks because of the high unsecured loan growth, and therefore the following pressures that came in because of the NPAs in that segment.
All right, Vishnu, we'll leave it there. Thank you so much indeed for joining us. Out of time on the show. Thank you so much for joining us on Lunch Today.
Good afternoon.